The administration is very focused on changing the way the US does business around the globe. And part of that change is making sure that they don't lose the control of the financial system or be the leader of the financial guardrails. He specifically said that digital assets, tokenization, stablecoins are all part of the administration's focus on this new economic order. You have to understand what that means. They are focused on crypto being part of the guardrails, and this coincides with AI. And that's the reason why I think you're at the beginning of a multi-year bull market in Bitcoin. And whether it starts in October, whether it starts in December, or whether it starts right now, I think we're at the bottom end of the range for the next year.
Three forces are beginning to collide at exactly the same time. Artificial intelligence is accelerating faster than almost anyone predicted. Governments are redesigning the financial system for a digital economy. And Bitcoin, after months of frustrating price action, may be sitting right where long-term opportunities are born. Most investors are watching the daily candles. Jordi Visser believes they're missing the much bigger picture unfolding underneath. While many people have spent the last year debating whether Bitcoin is still in a bull market, capital has quietly been flooding somewhere else. AI became the dominant investment story, pulling money out of crypto, software, and virtually every code-based asset. But according to Visser, that rotation may be approaching a turning point, and if he's right, the next phase won't simply be about Bitcoin recovering. It could be the beginning of an entirely new financial era. In today's video, you'll hear why Visser believes Bitcoin is forming a major bottom despite widespread pessimism. Why shifting Federal Reserve expectations could become the catalyst that changes everything. How AI and crypto are becoming increasingly connected. Why tokenization may unlock trillions of dollars in dormant assets. And why all of this points toward the early stages of a multi-year Bitcoin bull market that most investors still don't fully understand. Before we jump in, make sure you hit the like button, subscribe to the channel, and turn on post notifications so you never miss our latest market analysis. Let us know in the comments, do you think Bitcoin's biggest move is still ahead, or has the easy money already been made? Now, let's hear what Jordi Visser had to say.
The first thing is I always look for technical signs, and I finally got my first RSI divergence since the peak at the end of last year. And that divergence was using basically a 4-hour RSI. And I look for points where the price makes new low, which happened when we broke through 60,000 recently. But the RSI is higher than it was at the prior low, plain and simple. Now, that was the first time that we got one. So as a trader, I go, well, now I can buy something when we get back above 60, and I'll just stop myself back out below the lows. That's the way a trader trades. And that's the way that I've always thought. It's the way I was brought up. And I'm an Elliott Wave guy, and I still believe we're entering a very, very big thing. My belief is that over the course of the next year, we are near the bottom end of the range of Bitcoin. And see how I said that? Near. Could we go to 50? Yeah. Could we go to 45? Yeah. Do I think we'll be over 100 a year from now? Yeah. So what do I care whether I buy something at 60 or whatever? Yes, my percentage gain will be better, but if we're above 100, I don't care. So that's the first thing. The second thing is I've highlighted that we probably all underestimated, and I know I did, the impact that the AI capital suck would have from the rest of everything. It's not just Bitcoin, people. It's the hyperscalers as well. Basically, my benchmark arbitrage of money rotating into the space that's going the fastest, Micron went up 20 times, a 20 bagger. 20 bagger. You don't get that in big companies. And this is a big company. So for that to happen, you didn't need to buy Bitcoin. You didn't need to buy crypto. You didn't need to buy any of this stuff. Every single person in Silicon Valley talked about how startups, if you had AI attached to it, nobody wanted crypto. At the end of the day, people want to invest in things that are working. And so once it started to move lower, which coincided in October with the release of Opus 4.5, but it also coincided with another strong secular trend that has still been in place until last week, which was rate cuts. We had 150 basis points of rate cuts still in the market as of October or late September of last year. That peaked there. Some of it came out because of the actual cut, but then a lot of it came out because we started to build in hikes. And we have a full cut plus hike plus a probability of another one before the end of the year. So here's what I'm telling you is going to happen in my mind. That's all going to change, or at least the rate of change is going to be there. And I'm a rate of change, guys. I do not think they want to hike. I did a piece on the Fed this week and made sure that everyone was highlighted that, hey, the Fed, Warsh has spoken. He believes AI is going to be a productivity boom, and that there might be a point at the beginning where it's a little inflationary before we get to deflationary, but the last thing he wants to do is go on some tight hiking cycle because of inflation. We're going to get a negative CPI print. The question is, July 29th, when we have the FOMC, are they going to raise rates? There's a possibility, a good possibility, it's like 35 to 40% that they will. If they don't, then I think Bitcoin will be above 70,000 when that time comes, because I think people are going to start factoring in the fact that maybe they're not going at all this year before the midterms. Does he really want to hike before the midterms when he was brought in by Trump? So I think that may be on hold for a while. And it's not that it's a big deal because it means they're not cutting rates. But since hikes are expected, it is a positive relative to expectations. Those are the ways that I'm kind of looking at it, but I want to leave one more thing for people, and this gets into the bigger picture. Scott Besson gave a speech at the New York Economic Club, and I posted something on X on Friday that Matt Hogan had put out. I do think people should read the speech. I think they should also read the op-ed from Mohammed Al-Arian on it. This is the fact, guys, and we talk about it here. The administration is very focused on changing the way the U.S. does business around the globe. And part of that change is making sure that they don't lose the control of the financial system or be the leader of the financial guardrails. He specifically said that digital assets, tokenization, stablecoins are all part of the administration's focus on this new economic order. You have to understand what that means. They are focused on crypto being part of the guardrails, and this coincides with AI. So the reason I named it AI Macro Nexus, the reason I do my YouTube, and it's about 90% a combination of the impact AI is having on the macro world we exist in today, and 10% on crypto and what that means. We're now at the point where the reason I'm going to do a YouTube where it's going to be about 70% starting with crypto and then showing the difference of the macro world and AI connected to it is because we are about to enter the AI agentic commerce side, which means the velocity of money is going to increase. The dormant assets that remain in the form of housing, real estate around the globe are going to be liquefied and turned into active cash over the next 5 years through tokenization. These are all major positives. And that's the reason why I think you're at the beginning of a multi-year bull market in Bitcoin. And whether it starts in October, whether it starts in December, or whether it starts right now, I think we're at the bottom end of the range for the next year.
Visser's argument isn't built on hope, it's built on multiple independent signals beginning to align at the same time. From bullish RSI divergence and Elliott wave structure to changing interest rate expectations, he believes the market is slowly transitioning from a period dominated by fear toward one where expectations are simply too pessimistic. That's often the environment where major trends begin, long before the headlines finally catch up. But technical analysis is only part of the story. What makes Visser's thesis particularly compelling is his explanation for why Bitcoin struggled in the first place and why that pressure may now be reversing. In the next section, he explains how AI became the biggest capital magnet in global markets, why Bitcoin unintentionally became one of its funding sources, and why the very first stage of a new bull market often looks nothing like the explosive rallies investors expect.
So price leads narrative. The first thing that always happens in a bottom is you start getting short covering because people are frustrated that this has gone on. I think Bitcoin has been a funding side of the AI trade. I think it started when software got bludgeoned and all of the software names got hit hard, and Bitcoin was part of it. I would say anything built on code, you couldn't get away from the correlation. So if you wanted to hedge your semiconductors, which now had high beta, you needed to find high beta shorts. And high beta shorts ended up being Salesforce.com, Adobe, Workday, and Bitcoin. And I think all of those things became part of the momentum trade. So it's not a coincidence that as momentum has gone down sharply, that Bitcoin has a bid. So for people who want to be bearish, like, well, this is just short covering. All rallies that last for a year start with short covering, every single one, because it means the narrative that was existing before, the AI infrastructure trade, is no longer as strong as it's going to be. And it's going to take a while for that re-leveraging to happen. And as we go through earnings, like I said, I think you're going to have disappointments. Before, every single name was working. I don't think that's going to be the case anymore in the AI trade. I also don't think you can get 5-baggers and 6-baggers over the course of the next year. I think a lot of these things are priced well. Dylan Patel talked about it today, and he said, you're going to see some surprises on the CPU side, and the surprise is going to be that we've kind of gone a little too far. On the optics side, we've gone a little too far. He talked about this. I think what all that means is that place is priced in a way where if you can get 40% over the next year, that's great. I think Bitcoin can do more than 40% based on the fact that just to get back to all-time highs, you're talking about a double. And getting back to all-time highs to me will be left with the narrative that I just talked about. So the first stage is short covering. The second stage is for the momentum to shift. Once we get above the 200-day moving average, which I've said, that is the critical line. We are still way below it right now. I think it's around 76, 77,000. So we still have quite a ways. We have 20% before we get up there. So this will be a short covering rally. We'll see how it goes. And like I talked about, and for people who heard this before and still reach out to me, are we still watching Doge? Yes, I'm still watching Doge for the energy side of crypto. But I do think there will be surprising news on what you said over the course of the year, where when people start to realize that the 40 name index that I've created, which goes through 8 separate verticals or sectors, is a direct overlay with Bitcoin, that Bitcoin just represents the ecosystem. And I think the ecosystem is going to benefit from the agentic side, and that's going to flow to Bitcoin as well. The Michael Saylor thing to me, he's even become like, people are blaming him for why Bitcoin's not going higher. Bitcoin, as we talked about, in every asset, you have corrections. I don't get into 4-year cycles. I don't get into any of this stuff. But the reality is what he has done and what he has been able to do, I'm more focused on the quantum side of crypto and the solutions that are coming out and some of the themes about, should we just basically deal with these tokens that are dormant? And the man owns an enormous amount of supply of an asset that I believe the world is going to acknowledge is a real asset for collateral. And as we get into tokenization and we start getting into the dormant asset side, I think people will start to understand the value of collateral again. Like, they'll start to understand what he has always talked about. So I never bought into this thing. I do agree that the most important thing is that it's actually higher than when he made his biggest sale. That would be a sign that if you would have said to people, hey, what would happen if a week after he makes his biggest sale, the unthinkable that he said he would never do publicly, and even though this is for a different reason, so it doesn't count, but he did do it, what would happen? Everyone would have said the thing would be down big. So the fact that it's higher, I think, is a Apple type news item where it happened. And once you don't sell off after something like that, it actually is more of a positive than a negative. So I don't think this will ever be talked about again in a big way.
One of the biggest takeaways from Visser's analysis is that markets rarely move because of a single headline. Instead, major trends emerge when multiple forces begin pointing in the same direction. Technical momentum starts improving. Monetary policy becomes less restrictive than investors feared. Capital rotates away from overcrowded trades, and entirely new investment narratives begin attracting attention before the broader market recognizes what's happening. Perhaps the most important part of his thesis is that Bitcoin may no longer be trading as an isolated asset. Instead, it could become one of the core pieces of a much larger transformation driven by AI, tokenization, digital collateral, and programmable finance. If governments continue embracing digital assets while AI dramatically increases the velocity of global commerce, Bitcoin's role inside that new system could look very different from the one investors have known over the past decade. Visser also reminds investors that every major bull market begins when confidence is still low. Short covering rallies are often dismissed as temporary rebounds, yet history shows they can become the foundation for much larger advances once momentum shifts and institutional capital starts returning. Whether Bitcoin reaches that critical 200-day moving average in the coming months remains to be seen, but his broader message is clear. The long-term opportunity may be far bigger than the short-term volatility suggests. If his AI macro nexus thesis continues unfolding as expected, today's market may eventually be remembered not as the end of Bitcoin's cycle, but as the beginning of an entirely new one where AI, digital assets, and tokenized finance evolve together rather than as separate investment stories. If you enjoyed this analysis, don't forget to like the video, subscribe to the channel, and ring the notification bell so you never miss our latest Bitcoin and macro market updates. Share this video with anyone following the crypto markets. Thanks for watching, and we'll see you in the next video.